Hello traders, welcome back to FXCM YouTube channel. My name is David Rondonio. I'm a trader and I also do market analysis. In this video, I'm so glad to be talking to you about what is price action, which is exactly what I do in trading. So let's start talking about it. Let's start by defining what price action is, okay? So this refers to the movement of any asset price over time, right? So time and price is like our motto here, typically displayed on a chart, right? Without the use of additional indicators of analysis tools. It is a core concept in technical analysis, and it is based on the belief that all information about an asset, like its trend, momentum, potential reversals, and so on, it is contained in the price movement, and we're gonna just have to read, right, the path it is following. So I wanted to share with you some key elements of price action. Let's start talking about candlestick patterns. There are a lot of. We use candlestick charts to observe price movements, identifying patterns such as doji engulfing or hammer patterns that help us to understand what's going on in the price. That can signal potential reversals or continuations in the market and so on. It has a lot of theory, but once you learn all of that, it's easier for you to just read what's going on the price. Then we have support and resistance. We don't understand support and resistance as double or triple bottoms, highs, and so on. We understand support and resistance more as liquidity zones or rebalance places for the price to be rebalanced. Our typically support or resistance zones will be the fair value gaps that are going to be filled or rebalanced. For example, right here, we can see this fair value gap right there showing you, and we can see how it worked as a resistance point right there for the price. It couldn't go lower, didn't show the strength to go lower, so that worked in that way. So that's how we understand support and resistance in price action. This is very brief, of course. We can go deeper and deeper and deeper on each understanding of this, but this is like the surface of what price action is, right? Let's continue with the trends. Then our understanding of trends, we look for upward or bullish or downward or bearish trends based on price action as well. So a series of higher highs and higher lows suggests an uptrend, while lower lows and lower highs indicates downtrend. So this is something we watch. We try to understand also the breakouts. For example, right here, we're going to higher high, higher high, higher high, higher low, higher low, higher low. Then we experience a lower low and a lower high, and then the breakout, the break of the structure. This is something we want to read. And after that, we start reading the strength or the movement that happened. For example, what kind of fair value gap it had below. For example, right here, we can see this fair value gap wasn't fulfilled, right? So we understand this as a breakout gap. Then we have the regular fair value gap. And finally, we understand the other movement as a measuring gap. So once we place these three gaps, these three kind of gaps, we can measure and do regular standard deviation between the high and the initial part of the movement. So after that, we can measure those movements and see if there are convergence with the structural movements and so on. As I was telling you before, this has a lot of, we can go deeper on each of those understanding, but this is most likely why we do or what we do when we are reading the price action. Let's continue with the volatility and momentum. The speed and size of price movements can reveal volatility and momentum in the market. We also use the time as the most important tool for us. Why time? Because we know for a fact that there are different series of moments on the day. We have, for example, Asia range, where the price times go backwards, and in it we have London session, where a lot of momentum occurs, and then we have New Year session, where a lot of volatility occurs. So all of that, as you can see, is based on the fact that we measure movements with time as well. Let's continue with the patterns. Price action traders, we often rely on charts patterns like head and shoulders, double top bottoms, and triangles to predict future movement price. As I was just showing you before right here, we can understand this as shoulder, right? It's a head and shoulder movement right here. We don't give those exact names, head and shoulders. That's more retail understanding, but that's for you to have an idea of what we used to watch. We used to monitor also the higher highs to understand where the liquidity occurs. So we consider this as a liquidity point taken, then a reaction on the fair value gap. So as you can see, all of these work together to understand what's going on the price itself. So price action training focuses on the psychology of market participants as reflected in the raw price movements, and avoiding the use of lagging indicators like moving average or oscillators. We don't use those. This approach is favored for its simplicity and for providing real-time insights into market behavior. Even though it has a lot of content, it requires a lot of education by ourselves, but that's what I work better with. So, well, this is very brief, but I wanted to give you a short introduction of price action. If you like it, drop us a comment and we can dive more into this. That will be all for this one. Don't forget to share and subscribe, and I will see you on the next training session.